morning, everybody. It's Friday, June 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn down 2.5 at 449.5. July soybeans were down 11.5 at 1188.5, and July Chicago wheat was down 11.25 at 628.25. This morning we had an export sales announcement. 104,000 metric tons of soybeans to China, and that was for the 23 marketing year. Also out this morning, non-farm payrolls came back better than expected, up 272,000 in May. That was versus 190,000 was expected. However, the unemployment rate did rise up to 4%. It's the first time since 22 that we've been back at the 4% or above level. Good morning, guys. It's Friday. We're going to put a bow on the week here. A little bit of news out yesterday, certainly from Brazil, relative to, a possible change in tax policy. There's been rumors that some commercials have withdrawn offers for beans and corn. Certainly saw a little bit of business here this morning on the bean side. So I guess, Justin, maybe a few thoughts on the top, just on this story, what the ramifications could potentially be, and then we'll throw it around the room.
Yeah, sure, Dan. A lot. I mean, still kind of trying to figure it out. I think, it sounds like they have a very, very complicated tax code already. So they're trying to simplify it. Supposedly it takes, something ridiculous, like 1,500 hours of work or something for some of these companies to do their taxes properly and figure out all the different credits and things like that. I was reading something this morning. It sounds like maybe the consensus right now is that the net result would be, 4% increased cost or lower price to the producer. So basically what the crushing facilities can pay the domestic users, they'd have to pay about 4% less to the grower to offset the tax implications. So I think that, the short run obviously yesterday was, domestic users there kind of pulling bids, trying to figure out what all this meant and what they could bid. So in essence, that turned into, USA is going to do a bunch of business, and that's kind of what lit the bean complex yesterday. How much of that actually we sold 100,000 tons today. But the old crop, bean spreads have made new highs for the move. They've been pretty strong this whole time. Same with corn spreads, really. Like, even going into first notice day, these spreads have been firming or even inverting in some cases. So feels like, we were down 7 days in a row. I mean, we were due for one of these big, whether it's a correction or a start of something different is TBD. But, they got pounded relentlessly for 7 days in both corn and beans. Wheat's the same boat here. There's been big arbitrage things going on in wheat, between Matif, Russia, what's going on over there, and our markets. We forced most of the shorts to cover our wheat complexes, probably getting that long a little bit before we topped out. Now we're going into harvest. So I think you're probably just running into, we had a big short covering rally. We had a $2 rally, and now right in front of harvest. So I think it's kind of be expected for wheat, as we've had really good prices, and there's gonna be some really good wheat crops too. Obviously there's some problems, but there's also gonna be a lot of good wheat in this country.
Yeah, and I think it was interesting, Russia out this morning, highlighting that part of this emergency declaration that they're looking to make wasn't going to disrupt, any export policies or programs. So I think that was kind of a, I think people were waiting to see what that narrative was going to be too.
Yeah, it's just, we've talked about this a lot of times on the show. Wheat specifically is, origin of last resort here in the U.S. So we can follow those markets all we want. We just never really end up selling it. So we always seem to be not competitive. So, the hope was always that, or by the bulls would be that Russia decides they're going to stop exports and the market's forced to come buy U.S. wheat. But if that's, until that actually happens, it'll probably be hard to sustain a big rally past these recent highs that we just saw, in my opinion.
Yeah. Dustin, few thoughts here as we wrap up the week. Just overall market sentiment and what you're looking at.
Yeah, saw a lot of open interest growth this week, so we're going to be watching COT this afternoon just to see, who is selling into last Tuesday. We imagine that funds were building on their short, but where the commercials kind of working in unison there. A lot of times they're on the opposite end of that balance sheet. So when you get a move like yesterday, especially you get some small catalyst like what happened in Brazil, if that kind of builds on itself, and there's also some sort of weather that's interjected in the next 30 days, we see recent drops in price and increases in open interest as a pretty big build in the position. So if you were all of a sudden to force everybody underwater in those positions, go back above those major moving averages like the 50 and the 100-day. So I think you could, like we were talking about yesterday, get a little bit more of an outside move higher. So I'd be curious to see if there's any follow through into the end of the week on this. Otherwise, those points I just talked about, while they'll be supportive, we can get through them. There are also selling points for a lot of people still. Many people are selling into that 200-day. We're back up to trend line resistance, and the 50 and 100-day could be selling points for people on these corn in particular. So just be curious. I think a close above 476 would be a big thing for just the shape up of the market going into the weekend.
And that'd be a nice little pop here for the day session if you get up into that level, for sure. Give some positivity to close the week. I mean, weather, looking at that, looks like we're dry for 10 or 12 days with a little bit of heat coming. So you should see stuff starting to grow pretty quick.
Yeah, weather is definitely not threatening. And,
No.
usually we're not like real big on focusing on technicals, but look, we just had a massive sell-off in the matter of 1 week. That's market flow. That's people moving in unison. There's really not much new information discovered there during that time frame. Yes, energies are breaking a little bit. Yes, the real was breaking a little bit, but like that's a pretty large contra-seasonal sell-off in in the first week of June. On not really much news other than we got it planted and the focus came back to marketing. So I think that's where there needs to be a little bit of focus on flow and the technicals of this. If you just force all those fresh positions into the market underwater, that a lot of times can lead to an exit of those positions.
So. Yeah, and Dustin, we've talked about this a lot, internally, just the amount of money out there right now, and the type of size that these players have. I mean, we're joking about it, but this, GameStop and Roaring Kitty. I mean, if you want to talk about something that has nothing with fundamentals, it's just money flow. I mean, look at some of these moves and you look at how many, $3 trillion companies we have now, each one being bigger than most countries, so just the amount of money, and we've talked about this, just the debt and the money that we've been printing and injecting into the system, we should expect volatility to increase, and we don't always have to have a fundamental reason for every move. And that's a lot of headline chasing with like, hey, we broke 7 cents, the corn yield must be record, or we rallied 20 cents yesterday, it must be because, the grower's out of beans. Whatever that case is, like there's going to be big moves like this more and more frequently.
Yeah. And, just kind of going on that point too, what's a fair price for corn? I think a lot of times when we're talking about that, it's like people will say things like, oh, traditionally $5 is really profitable selling price for corn. And we know that that's not really the case this year. And we know like in the past, when people have made comments like this, like X percent of corn you can make money at, a lot of times that's been a true statement because we've had rising trend line yield to support that. So, total revenue on the farm was continuing to rise because we had a growing trend line yield. Now I look back, we've had such an aggressive rate of inflation. We've lost 20% of the dollar's purchasing power in the last 4 years. And inflation is still here, even though it might be slowing a bit, it's still here. So we're all spending more money on almost everything. And that goes into input costs as well. And the sustainability of current prices is, I think, partly why we're not all that excited about just throwing in the towel and saying, oh, this is the price for the year. It's going to go back down to sub $4 where it was, the last time we had this type of a carryout. Anyone that puts up, the last time we were at 2 billion bushel carryout, we were sub $4 corn, so that's where we need to go. I think needs to do a reality check on what the purchasing power of that dollar denominated product means. I really think that it's not going to be sustainable unless we're going to see a big shift in land values, big shift in cost production. Those are the more the Titanic shifting type of things that are going to be hard to do. I think buyers and sellers can match up above $5. And that's why I don't want to necessarily just get into bear market mode, which we think a lot of the market's gotten to.
Well, and that's, to that point, we've already traded the 2 billion carryout. That was last year's crop. We don't know what this year is. We don't know what, early indications are demand's pretty strong, from what we've been seeing. We have no idea on the supply. Yes, we've had rains. We got the crop planted. I mean, if the market actually thought the crop wasn't going to be planted, we'd be much higher, obviously.
Sure.
So there's just, to your point, just looking at a carryout, a lot of traders have gone broke just saying, here's the carryout, here's what the price should be. Like, that doesn't work. Ultimately it's supply and demand. So if there's willing buyers at certain prices, that's what matters more than, what someone wrote down as a carryout, bullish or bearish. You could have a bear market with a 1.5 billion bushel carryout and a bull market with a 2.5, for different reasons. So.
That's very good, guys. Couple minutes before we come into the open here, Ryland, they're looking like they revised the kill estimates up a little bit higher. Steer and heifer weights were about a pound lighter. What's your thoughts as we wrap the week here?
Yeah, I mean, weights are still a monster for this year. We're still well above where we were last year, and it just seems like, any changes to the kill right now, especially revising it higher, I think just puts more pressure on the beef market. And I think that's where a lot of the focus has been so far, just because it's been on a nice run. But typically we see the market start to reach its kind of seasonal peak around this time of year. So we saw a little bit of cash trade yesterday at 185 in the south here. That was about $1 lower. So not too much in the north yet, but I mean, we imagine we're still going to be kind of around, last week's prices, maybe slightly lower just based on the price action here. So we're coming into June option expiration, which is today, and then first notice day on Monday. And the market's kind of doing, I think, what it needs to do just to get those, get the longs kind of out of the June and out forward that don't want to take delivery. So it could be up for a little bit of a pop next week, but you got a little bit of a fight going on just between what's going on in cash and on the fundamental side of the market. So I think if it's there, could be kind of short-lived unless we see cash kind of stabilize. So overall, that's what we're going to be watching here for next week. Hog market finally kind of stopped the bleeding. Saw a little bit of capitulation just over the past 3 days, and it finally started to level off. So funds got caught just on the wrong side of the market, wrong idea, and obviously just bailed. If not, maybe even moving to a short position. So it seems like that. Hopefully that price action kind of stabilized a little bit. But cash was like $2 lower again yesterday, and cutout finally started to stabilize with bellies being up a little bit. So overall, just hopefully we can kind of see a little bit of bottoming action in the hogs. I'm not gonna, don't hold me to that, but I would like to see that just because you've just destroyed that market and you've gotten most of the specs kind of out of the way. So that's what we'll be.
Did I see there was about $17 break in 40 days, right?
Yeah.
Is that about what it was?
It has been nonstop. The funds went from near record long position all the way down to nearly, we'll see what the COT data says today. I think everybody's just wondering, did they finally just get out? Because the past 3 days would suggest that they finally just threw in the towel, and now we're right back to contract lows. Or within reach of contract lows. So hopefully that pressure is going to be away from the market, after this next week.
Appreciate the outlook there. We'll get back with it on Monday. It is Friday, which leads us to the best part of the week, Brian's Fun Fact Friday.
Thanks, Dan. Happy Friday, everybody. With a lot of wheat talk in the last few months here, especially with Russia's production dropping, I was thinking to myself, like, who wants that job with boots on the ground there, trying to get those yield estimates with all the turmoil surrounding that country? So I was thinking to myself, what would be the safest way, in my opinion? Jump on the Trans-Siberian Railway. Not only is that railroad the longest in Russia, it's the longest in the world. So Dan, Ryland, if we get you 2 tickets on that, it'll take you a 7-day journey. You'll pass through 8 different time zones, and you will cross 3,901 bridges.
Wow.
So
Hopefully we don't have to stay in the same room.
We wouldn't make it out alive.
Yeah, right. So I thought that was kind of interesting. I wouldn't want that job getting those yield estimates out of there. So
Rye's going over the first bridge we pass.
yeah,
I'm going right to the club car, man. That's where I'm going.
there you go. Happy Friday, everybody.
Thanks, buddy.
Thanks, Brian.
Just came into the open here. We got July corn down 3 3/4, now 448 1/4. July soybeans down 11 3/4, 1188 1/4. And July Chicago wheat is down 14 3/4 at 625 as the last. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you Monday.